just because you purchase a policy does not mean everything is covered. And unfortunately, a lot of people find out the hard way at the time of a claim that they don't have coverage for something that they assume that they did have coverage for. Had a client, been a client for mine for about 15 years, and he ended up opening his own business, and he was using his personal vehicle for his business. And how we knew this, or at least at the time of a claim, is he ended up buying a sticker that went onto the side of the vehicle. And on the side of the vehicle had his business name. He was in an accident. He had a personal auto policy, and that carrier denied the claim because it was not set up for a commercial policy, commercial use. So that vehicle was personally owned on a personal auto policy. And if you read your personal auto policy, there is an exclusion for the use of businesses. So if you're using your personal auto for business use and you do not have an endorsement by that carrier, there is no coverage. And in this case, that client had no coverage. He had to hire an attorney. He did rear end somebody, not only to defend himself, he ended up having to pay out of pocket the damages to the other vehicle and the damages to his own vehicle. In retrospect, it ended up costing him over $65,000 out of his pocket, where if he just communicated with us, he would have probably ended up spending about $1,000 more, saving in excess of $55,000 to $60,000 of savings that he ended up spending because he didn't communicate with the agency. People aren't managing their policies because it's not a fun thing or an enjoyable thing. Who really likes to sit down and analyze their policy? People don't. And because of the pain point and the discomfort, and people don't enjoy it, they're not reaching out to us. So that's why, as an agent, it is critical that we at least reach out to you once a year, because that one time a year is still a pain point for a lot of people. People don't like spending money on insurance, nor do I. But it is vitally important to make sure that you're paying for what you need for coverage, so that if you are in an accident or you do have a claim, that there's coverage. Because there's nothing worse than being really angry at the premiums you paid, and then the carrier coming back at the time of a claim saying it's denied because you don't have coverage for it. Biggest life changes that we see, especially in personal, is people get engaged and they move in with each other, or they get engaged and give an engagement ring. Those are really big life changes, because now all of a sudden you move in with somebody, you're engaged, you now have liability risk of your partner who you're living with. In specific states, if you live with somebody and you have two separate policies, if your policy isn't enough and you're in an accident, and I live with my girlfriend or my fiance, her policy is now obligated to pick up any of the differences. So you are having a lot more risk. And there's a big change when it comes to moving in with somebody. For example, you get engaged, you give an engagement ring. For small premiums, $200, $300, you're insuring $5,000, $6,000, $8,000, $10,000 rings that can be either lost, or in some cases, diamonds fall out. They just weren't set properly. So for small insurance premiums, you can have the right coverages. It's just making sure that you're communicating with your agent, because at the end of the day, it's the agents that are busy and people that are having life changes. Only they know. It's their job and obligation to make sure that during these changes that they do reach out to their agent. They do advise the changes that are taking place and ask for advice. Hey, what do I need to do? The biggest business changes that we've seen, especially in the past 24 to 36 months, is that businesses are evolving and they're adding different things that they didn't do in the past. For example, we had a gentleman who was a sidder, and that's all they did was siding. They even had it in their business name. They ended up adding roofing to their array of business. And what ended up happening was they ended up having a roofing claim, and they never advised the carrier or the agent that they now no longer just do siding. They now added roofs. And in that case, that claim was denied because that business policy that they purchased is risk-based.